People need an income that's guaranteed to them.
If you lose money to taxes, you're never getting that money back.
You need to get serious about adding some lower risk.
Greed. I don't like greed.
The thing to be afraid of, honestly, is the thing that we're not thinking of, the black swan event.
There's a tsunami coming. Bye.
Welcome to Retirement Coffee Talk with Charisse Rivers.
Just coffee talk.
There's a lot of noise, a lot of chatter. Who do you listen to? Who do you not listen to? You have to stay focused.
A fun and informative look at the issues of wealth, retirement, and protecting your life savings.
These advisors out there that were trained to sell, and have all these fees, they don't want to talk about this product, so they make less money.
And now, Retirement Coffee Talk with Charisse Rivers.
Hello again, and welcome to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. Online, you can find us at zinniawealth.com. We're glad you found us here today. And these are those times that people are tuning in, Charisse, because there's a lot of ups and downs and volatility and crazy stuff happening economically and in the market. So we're here to talk through some of that today. How are you doing today?
I'm doing great. A lot is happening in my world and the universe we live in, and I'm sure everybody's world right now. Lots of excitement, a lot of crying, and a lot of I don't know what in the world to do right now. But other than that, we try to keep at a baseline here at Zinnia and at Charisse's home. And if you get too far high up, you got to come back to baseline. You get too low, you come back to baseline really quickly. Therefore, let's talk about the baseline of the stock market, Randy.
Yeah, I think you and I have talked over the last, couple of months that, the stock market does correct probably once a year. And we had 300 days, I think, since we had our last correction. So we were due. I guess the question is this what's going on right now? Is this self-inflicted all because of what President Trump has done with tariffs? Or is this something that was due anyway? And this might have been the trigger to pull us back a little bit, which is people will say that's healthy for the market to pull back a little bit. How do you see this right? A combination of the two, do you think?
Yeah, it is certainly a combination of the two. We were just talking about Trump, and there's certain logic in what he's doing, but we both wish he would be a little more strategic, maybe a little softer. He wants to keep inflation down, but now it's going up. All this, right? But are we in this moment in time where there's this ripple effect? There's noise, and people don't like change. Change is challenging, right? And so we're going to see times like this, and we have for years. I'm telling you, for 3 or 4 years, Randy's talking about, hey, the economy doesn't look good behind the scenes. Maybe on the top, we're looking great. The last couple of years, we all made a lot of money, but we knew that until things change internally, spending, cutting all these things out there just to get the economy rolling again and keeping inflation down, et cetera, it's, we got to put our heads down. We got to do some work. And so now we're here. And last year, Randy, we said, hey, in the first quarter of 2025, we're probably going to see a correction. If not, it'll swing into the second quarter. And that's where we're at. And over time, you have to have a correction. Over 300 days without a correction is just an anomaly, number one. So we're due. Yeah. And people are out there shopping and buying all this toilet paper because Mark Cuban says this and that. Like, everybody needs to just relax. Listen, I am not the advisor that's going to say, hang in there, don't panic. This is a buying opportunity, because there's different age groups listening to this show today. And whether you're 40 or 50 or 60 or 70, I'm going to say something different to a little of all of you, because at the end of the day, if you're in retirement or nearing retirement specifically, it doesn't make you feel any better when I say, hang in there, buying opportunity, right? What makes people feel better is just knowing that they're in the right allocation, that when the market goes down 10, they didn't lose 10. Maybe they only lost 3 or 4, right? Maybe 5 max. That means you're feeling better about it. You're not taking full losses in the market. Some people we work with didn't take any losses. So if this kind of noise right now is bothering you, it is a sign that you probably need to make some changes to your allocations, because the 60-40 is not the perfect strategy anymore, because there's so many alternatives and everything out there that, hey, when the market goes down, you could be making money when the market goes down, right, Randy?
Yeah, and I think, my original question there is this self-inflicted or not? When you start to look at it, what difference does it make? It could be anything. It could be a war that breaks out that makes the market go down. It could be a global event. It could be a local event. It could be anything. And the fact of the matter is, you look at your account right now, and it's down, okay? And you don't like that. Nobody likes losing money. And so we want to, spend our show today talking about what you can do about this and what your emotions are and not to get carried away with that. And I'm going to go back to something that we've used years ago because this show's been on the radio for 13 years now.
I know.
And we've gone through a lot. We've gone through COVID. We've gone through a lot of up. Last year, we went through the Magnificent Seven. Now they're down. That's pulling the market down as well. So years ago, we used to talk about a guy named Patrick Kelly. We've had him on this show a number of times. He's written a lot of books about retirement, and his very first one, Stress-Free Retirement, had this metaphor in it. And Patrick Kelly kind of shows what we're going through right now by talking about horses in a corral.
Picture a rancher who has some wild horses out there in his field that wants to get them in his corral. And so he goes down and puts some feed in there that he thinks might attract them. And he opens the gate of his corral and he watches one of the horses walk in and two walk in and 3, 4, 5. And he watches 9 of the horses walk in. And yet he has that 10th one that hasn't come in yet, that's still standing out in the field. So he says, you know what I'm going to do? I'm not going to shut the gate until that 10th horse is in. And so as he's waiting for the 10th one to walk in, the 9th horse that walked in decides to walk back out in the field. I said, now he only has 8. And he goes, doggone it. I wish I would have shut the gate when I had 9 in there, but now I only have 8. There's no way I'm going to shut the door now because I want at least to get back to where I was. The 8th one walks out and the 7th one walks out. And he watches most, if not all of the horses walk back out into the field, and he has none of them that are now part of his ranch.
So there's a lot of people right now, Sharice, that are saying, doggone it, in February, I should have shut the gate because the market was at an all-time high in February, and now we are 10% below that.
Yes.
So let's talk about shutting the gate. Is this the time now when your account is down to say, okay, I'm going to stop those losses right now. I'm going to pull back some of my market exposure, or do we wait for the market to recover and then do that? How is that discussion go right now in the office?
Oh my gosh, there's so many directions I can go here because if you have a brokerage account and you're trying to reduce exposure from the stock market and you want to do tax loss harvesting to maybe maneuver to new funds, it could be a prime time because there's not a 30% loss, right? Or somewhere around 10. It's bobbing and weaving every day. If you have an IRA and you're wanting to convert IRAs over to a Roth, this is the prime time to do it because if we truly believe the stock market's going to come back and it just lost 10, well, you move that IRA to the Roth, that Roth is going to grow back that 10% all tax-free, right? So there is a lot of momentum right now and timing is impeccable. And whether or not you take advantage of this timing is really up to you. But you should have already had these conversations with your advisors. I mean, I just had a client come in and I said, hey, markets are down. Let's not wait till the end of the year to roll the IRA to the Roth. Let's do it now. And they're like, oh, yeah, great idea. We talked about this. So we tell people don't sell right now. It's too early. If you've lost 10% because the market went down 10% and you're nearing retirement, you're certainly too risky. That means if the market does collapse, not saying it's going to, right? But if it does go down 30, 40, or 50% and you're planning on retiring in a year, 2, 3, or 4, well, guess what? It takes a couple of years to decline, typically, maybe 12 months to 24 months, and then takes 4 to 5 years to crawl out of that hole. You might not be retiring if you need those dollars to live on. So right now is prime time real estate to sit down with somebody that understands you, what you're going through, what the next steps are, and whether or not you potentially can retire. So I'm adamant about this because there's so many things we can do right now. So I don't like markets going down. Nobody likes losing, but I like the territory we're in right now because it does give us opportunity to move things for a better place in the future, just depending on the outcome. So we're not telling people, hang in there, don't panic. It's a buying opportunity. But we are saying, hang in there, don't panic. It is a buying opportunity, but let's look at all these other strategies that maybe we can place into this bad time we're in and take advantage of it.
Well, I don't want to make this sound like this is an emergency. It's an emergency. But, for you, it might be an emergency. And if you want to sit down with Sharice right now and say, hey, I don't like what's going on right now, and I sure don't want this to happen to me while I'm in my retirement. You're 3 years out, you're 5 years out, you're listening to this show because you're looking for answers. Okay, let's have an appointment. We call it a complimentary retirement consultation. That's exactly what it sounds like. It's a free meeting where we sit down and say, okay, where is your money placed? Now we can say, look how much you lost. The market went down 10, you went down 10. Let's not have that, okay? I think one of the things I've learned from you, Sharice, over the years is this. If you have your allocation, and let's just pick a couple of numbers, 35% in the market and 65% out of the market, and the market goes down 50%, you're down 17. And you can recover from 17, but maybe you can't recover from 50.
Right.
So let's stop that. Let's have that meeting right now. Here's our number on our website, 833-368-3680, 833-368-3680, or use our website, zinniawealth.com, ZINNIA wealth.com. There's a little gold box down in the bottom right-hand corner. It says complimentary retirement consultation. Click on that. We'll ask you to put in a little information, and we'll give you a call and get a meeting scheduled. All right, so a lot of people on the financial networks have been talking about what do you do when stuff like this happens? All right, so here's Carrie Hannon, and she's on Yahoo Finance, and she has 4 steps. This is her list, 4 things to do during crazy markets like we have right now.
First thing, number one, I tell people and all the advisors I've spoken to today, say, wait, sit on your hands a little bit. Wait before you make any big emotional moves, okay? Number 2, it's important to stay in equities, no matter how close you are to retirement. This is where your growth is going to continue to come from. That said, the older you are and the closer you are to retirement, you need to shift a bit into, some cash equivalents or some great fixed income opportunities. We're just at the beginning of what I would anticipate to be a few years of volatility. And so periodically you should be rebalancing anyway, but this might be a good time to have that conversation.
All right, so there's her 4 steps. Wait, don't panic, don't give up on the stock market. It's still a place for growth. Lock down some fixed income, especially if you're near retirement, and rebalance, exactly what we've been talking about. Do you like the list? And is there anything you would add to the list, Sharice?
Yeah. So the only thing I didn't really like is, stay in equities. This is what you have to do to earn money, which is not a true statement, because the closer you get to retirement, especially in retirement, you want to have less equities because there's other things out there that are going to be more stable, that will produce income and a good return, a reasonable rate of return. So I didn't like that. It was kind of cookie cutter. And then shifting a bit to cash equivalents. I was just writing that down as I heard it. I'm okay with that. As long as cash equivalents are making at least 4%, I'm okay with that. But it's really open-ended. I would prefer there to be a plan that's pretty locked down, where you already had your cash equivalents, you're not selling when equities are down, and you already have all these alternatives, whether it's real estate, private equity, some of these glorious notes out there, maybe even a couple annuities. Because if you had all of that built in, you wouldn't be worrying about what's going on today, because you see the plan, you know where the income's coming from. The income is not coming from the stock market accounts that are going down. So most of it was sensical, for sure. But a couple of things I just always question. Too cookie cutter. And we want to be careful not to listen to all the noise out there, but you can take bits and pieces from that. So that's what I got from that.
So I think one of the things I do is when everything goes crazy like this, I ask Sharice, are people calling? And most of the time, Sharice tells me, nope, they're not. And it's because of what you just said, Sharice, is we have a plan in place. We're not completely dependent on the market for our income in retirement. And people know the check is coming in, even if the market's going crazy. And that's kind of where you want to be, because I always say the big question I want to know when I sit down and talk about my retirement is, am I going to be okay? And some of the calls that you might be getting are, hey, Sharice, are you sure I'm okay? You go, yeah, you're okay. You're okay.
It's interesting because honestly, sometimes you just don't know what you're doing until you kind of get to this time of our lives when things are volatile and we're not getting calls. And it just gives me absolute peace of mind in my heart. It blows and warms my heart up so much to know people are not calling, because what I'm saying today is true. This is how people feel. Maybe they have a couple accounts that are rocky, but they know those are the ebbs and flows. We accounted for that. That's not part of our basket for the next 5 or 10 years, possibly. And so we just don't get those fired off calls here. And year over year, we've said that, if the market goes down to 30%, we're going to get a couple of calls, because we do have a couple of clients that are fully committed to stock market and said, I don't want to go down the alternative route. I don't want the notes. I don't want this. I don't want the cash equivalents. Yeah, we'll get those calls, but it's very far few in between. And you know what we do? I think this also gives people incredible peace of mind. They know that we are not sitting on our hands when markets are doing what they're doing. They already saw that if you're on our active managed portfolio, we have a day trading portfolio, that 4 weeks ago, we already maneuvered. So we still had wins in our portfolio where across the country, everybody was negative in their accounts. So I am so proud of those portfolios right now. And there's other things that didn't take a loss. And then we do have some high leveraged portfolios that people understand that are taking losses, right? We also have built-in exit strategies. Oh my gosh, people just knowing that, hey, this is the plan. If the markets derail and we're going into like a 2000 or a 2008 crash, they know they either have a 50% exit strategy on some of their money or a 100% exit strategy. But I'm going to tell you, there must be some sort of softness in their hearts and their brains, and they're relaxing a little bit more through times like this because we're not getting the calls.
Yeah. You got to have confidence going into retirement. And I say it all the time. You want to know the answer to the question, am I going to be okay?
Right.
And once we get that plan in place, when times like this happen, you see the plan work. And that's really what you want to do. You don't want to be in your retirement watching Fox Business and watching CNBC and going to your phone and watching those arrows go down and everything's in red and you wondering, am I going to have enough money for retirement? You want to know that those checks are coming in no matter what's going on. That's the kind of plan we want to build for you at Zinnia Wealth. Give us a call, 833-368-3680. Again, 833-368-3680, or online, zinniawealth.com, ZINNIA wealth.com. Hit the button that says complimentary retirement consultation. Now, Charisse, we talked about, financial media. This is going to be one of those times right now where we're going to see Susie Orman and Dave Ramsey and Mark Cuban and Kevin O'Leary. All these people are going to be on TV now, and they're going to be giving advice about what to do during times like this. And some of that stuff is kind of generic. And we always encourage somebody to come in and say, okay, that's fine, but let's find out what it is that you have to do. So we've talked in this first segment about we should allocate different. If this bothers you, you probably have too much in the stock market. Right. What does that mean? Tell me nuts and bolts. You look at somebody's portfolio and pie charts and reds and greens and all that stuff. What does it mean?
Yeah. So, we don't want to be generic, and those big guys out there, Susie's and Dave's and Clark Howard's and you name it, they do kind of a high level overview. They're not speaking to you directly or individually. They're talking to the masses. You could be 30, you could be 70. So they can't just give you that direct data that you need personally. So we want to customize what they have told you or what you have heard into what you need to do based on your age and season of life. So really just sitting down with you. And now we want to find out, who are you in times like this, right? Do you take a cool and calm outlook when markets are rocky, or do you actually really panic? We want to start with that. And then we break down the portfolio that you have with your advisor right now. And we just want to see, okay, I'm going to know, our advisors are going to know how much risk you're taking. We're going to know right away if the market crashes, if you're going to lose 30, 40, or 50. So if you have $1 million, I'm not going to tell you that right away. I'm going to say, listen, markets are down 10% right now. So your $1 million is down to 900,000. You lost 100,000. How are you feeling right now? And people are like, I'm okay right now. Good. I said, okay. Now, what if it goes down 250,000? You have 750 left. How are you going to react? And most people nearing retirement will say, I'm getting a little wobbly here. I'm feeling a little uneasy.
Yeah.
And then I'll say, well, let's say that $1 million is now 600,000. How do you manage that? And they'll say, no, I did that one time before when we were working. We're not contributing anymore. I got to live on this money. No, that's not going to work. Then I'll turn around their portfolio x-ray where we take a scalpel to it and show them, well, this portfolio, based on how you're investing right now, if you do not make changes, says you're going to lose 42% or maybe 50% or maybe 38%. How do you feel about that? And they every time said, what?
No way.
I've told my advisor, I don't want that much risk. I'm like, this is where you're sitting in your risk pool. This is our scalpel. We are stress testing your portfolio. That's where you stand. And if that's not where you're at, I'm so glad you came in today because we can fix that.
Putting a number with it, I think, is really vital. And we talk about that all the time. And percentages are hard to get a handle on. But when you say you're down $26,000 and you go, what? I thought
260,000.
Or yeah, exactly. and so, and you've said this many times, if you have $1 million and you lost $300,000, would that change your life? Yeah, probably. If you had $1 million and it went up 300, would that change your life? Not really. Okay, so that really tells us something, doesn't it?
It does. Because when the market goes up 30% and say you have $1 million, now you have 1.3 million, you're not going to change your spending habits. Your spending habits are within you. That doesn't change. But so you're not going to get rich here. But the goal is to not make you poor, because when you have $1 million and now you lost 30 and now you're down to 700,000 and I say, hey, sequence of returns risk says you shouldn't be touching this money now that it's down. You got to sit it out. And you need 4% from your $1 million portfolio that you had, and you can't even take 40 grand out. You have to start thinking about the consequences that will take place, because there is a price to admission in the stock market. And it is, we're going to go up, but we're also going to go down. And what do you do when it goes down and you need that darn income? That is a crippling part of retirement that people don't understand, because you're doing things on cookie cutter, outdated, paint by numbers strategies from the 1980s. And we don't want that. We want to change the future. We want to have a little bit better prediction in the income plan and make sure it's more strategized. And it's very, very important in this season of life to make sure that you are staying at baseline and you're getting what you need.
Well, imagine yourself right now. Maybe some of you're listening to this show because you're looking at retirement planning. You're 3 to 5 years out, or maybe you're right on the edge. Imagine if you were 5 years into retirement right now, and all of a sudden you lost $100,000 in the market. It would make you really uneasy. It really would. And let's not let that happen to you. Let's have a plan where that doesn't happen. The market does its thing. We all know that. But we don't have to live our life by what the market is doing. We can have a plan outside of that.
And on top of that, I was speaking to a big group, and I pulled up the slide, and a lot of them are getting ready to retire. And I said, and some of them were retired actually, and I said, if we have another 2007 and 8 and 9 where the S&P goes down 50% based on where you're invested today, if you were to, turn in the keys to your employer, step out the double doors and collect your last paycheck, where would that next paycheck come from if the stock market went down 20 months? And they all said, well, we pull it from that stock market account. I said, no, you don't. No, sir, you do not. And we had to educate, because people just don't understand it because they've done it for so long a certain way.
Yep. Pulling from a down account is one of the things that we talk about on this show. And that's how people run out of money. That's not what we want for you. It's the number one fear of retirees. Let's have a meeting now so that we can head this off. Let's have a plan for it, because it's going to happen again over your retirement. It could probably happen a bunch of times. Let's have a plan for it now. 833-368-3680 is our number. Ask for that complimentary retirement consultation, or just say, I want a meeting. I want to sit down and talk about my money. Or you can use our website, zinniawealth.com. Hit the gold box there. It says complimentary retirement consultation. We're going to take a break, and when we come back, this might be one of those times where you say, yeah, you know what? I've got to dive deep into what I've got, what my holdings are. Well, one thing that comes out of that is, how much is this costing you? You may not be aware of it, but there are fees that are associated just with that 401k and Vanguard or Fidelity. And sometimes when you look at those, they're eye-opening. What can we do about it? We'll talk about it. Coming up next on Retirement Coffee Talk. Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, you can find us at zinniawealth.com. Hope you do. ZINNIA wealth.com. There's a lot of things to scroll around. You can see there's a tab there that says education. You can click on that. And when you open that up, all sorts of different guides that you can download. You can listen to our podcast. Tool around there a little bit today. ZinniaWealth.com. All right. So we talked about, diving into your portfolio, looking at what you have right now and wondering, am I in the right place? This is the time we do that when the markets call all topsy-turvy. Well, one of the things that you might find, and you will hear this when Sharice does the analysis of your portfolio, that there are fees that are associated with what you are doing, even just in a 401k. And I've got a study in front of me that says the average American worker will lose $93,000 in hidden 401k fees. That's a lot. That is a lot.
It's a lot.
Now, when I mentioned Vanguard a little bit there, so I'm going to go there. Jack Bogle is the guy who started Vanguard, and he was a guy who had, he thinks fees are the enemy. And so he talked a lot and did a lot to try to keep fees down. Here's the late Jack Bogle.
Do you really want to invest in a system where you put up 100% of the capital, you the mutual fund shareholder? You take 100% of the risk, and you get 30% of the return.
That doesn't sound like a good system.
No, it's what we lack. God rest his soul.
Yes.
But he was right. He really did change the industry forever, and this more and more people kind of went that direction. We are one of them, and there's a couple other firms out there that did that as well. So fees. It does make the world go round, but it shouldn't make your world go round.
Yeah.
And I say that because there's a lot of you out there listening right now, and there's probably 4 different types of listeners right now. So the fee depends on what you want out of your advisor. So if you don't need tax planning or estate planning or insurance planning or a family office type of deal, you probably can manage your own money, because if you're just doing the buy and hold 60-40, I mean, shucks, let's go pick a couple of Jack Bogle's funds and you're probably ready to rock, especially if you don't need the money. But you pay for what you get. You get what you pay for. And, we do advanced planning, and doesn't mean everybody that comes and sees us needs advanced planning. But I will tell you this much. Let's say you have somebody come in and you're over at Fisher Investments and they're charging you 1.25 to do nothing. They're not doing any tax planning, estate planning, any of that kind of stuff. That type of portfolio in our office is 0.5, right? But there's actually a lot more going on. So the fees do matter. Just because somebody's really great at marketing doesn't mean they deserve a 1.25% fee to sit there in a buy and hold type of strategy portfolio, right? So why do you go in and go to an advisor that charges fees? It could be a lot of different reasons. Some people come in and see us, Randy. You have a husband and wife, and the husband, on average, is typically older. And they know that they take care of the finances. And sometimes a spouse will do the bills. But they know if they pass away and their wives are left with the finances, they don't want an advisor to come dupe them or rip them off. So people are implored right now to come in and find an advisor for that surviving spouse, to make sure that they're confident with that person's communicating with them. So people are willing to pay a fee to have that relationship ongoing, but they still want to keep their fees down. The other types of people out there are saying, Sharice, I've been high risk. I want to be a little bit safer. How does the fees change when we go down this road? And so depending if you have a lot of risk money or a lot of safe money, more than not, the risk money that you have out there, it does have a little bit of a higher fee. But if you are transitioning to a safer managed portfolio or allocation, your fees should be absolutely probably cut in half or even more. So it depends on what you're looking for, that season of life. Is for spouse, if you're lowering your risk. It depends on so many things when You're looking at advanced planning. Some offices, and we do this too, have flat fees, right? And flat fees are great. But people really do want an active managed portfolio or more of a strategic approach. And they want to know we are there if the spouse passes. They want to know we are there to double check these estate plans. They want to know we're there when there's an elder planning issue because they know we're good at that. They know we walk the walk with clients and with our elder attorneys and the long-term care part of the world. They know they're always going to need some sort of insurance. They want to work with us. There's just so many parts to what we do here. And so you guys get to choose, and you get to choose the advisory firm you want to work with. I do say be cautious of fees. I mean, if you save 0.5% in fees over the next 30 years based on $1 million portfolio, that is so much more money back in your pocket.
Yep.
If you save one, it's incredible, Randy.
Well, I'm such a simpleton, and I bring things down like this. I hired a lawn service, okay, because I don't have time to do my lawn. Some of you may look down upon me for that, but I would rather spend my time doing other things. But I got a lawn service that doesn't just do my lawn. They do the bushes, they do the weeds, they put in the bark, they do they blow the leaves in the fall, they do all that stuff. So I'm getting more than just lawn mowing. Okay. When you get a financial advisor, you should get more than just advice on where your money should go. Charisse, I mean, you're in the retirement space, so you deal with Social Security advice. You don't make money on that.
No.
You deal with Medicare. You deal with people who come in and say, hey, Charisse, should I buy the car or lease the car? Charisse, can I afford to buy this RV or should I rent that RV?
I get that
all the time. And you don't make money on that. That's because you're in this space of helping people in retirement. And I think it's important to say, what am I paying for and what am I getting for what I'm paying for? And then you can weigh out what the advisor is right for you.
Exactly. That's the best way I could have explained it. Thank you, Randy.
So we have this show so that you can compare what Charisse does to other people and say, you know what? She's got something to say. And I think I want to sit down and talk to her about it. Give us a call. Give us a look on our website, 833-368-3680, 833-368-3680, or zinniawealth.com. Check our website out, zinniawealth.com, ZINNIAwealth.com. Well, one of the big concerns of people when they get into retirement is what's going to happen if I get sick or if my spouse gets sick. And people write into these advice columns, and this is the situation that they're in. A woman writes into the Market Watch advice column, and she says, my husband is elderly, and he has dementia. I've been taking care of him, but this is getting to be too much. Sooner or later, he's going to end up in a memory care facility, and that's going to cost $100,000 a year. Now, we have $300,000 left on our mortgage. I hold power of attorney. If I pay off the house, will that protect our money? Will that protect the house? We hear this all the time. Should I give my child the deed to my house? Should I protect my house in this way? Charisse, this is a big deal when people get into long-term care situations of protecting assets. How does that conversation roll out?
Yeah, so that's a lot to unpack, Randy, because this is a very serious situation. We will refer our clients out to elder attorneys that we work with, and we sit down with them and you at the same time. So we know enough to get in trouble. So we will defer to them. But I will say, you have a married couple. One of them is about to go into a nursing home, and there's some basic rules. The surviving spouse, or the spouse who's still in the house while the other spouse is at the nursing home, you're allowed to keep, one car, one house, and a little over $100,000 in assets. Wow. Other than that, you have to spend all of your extra cash on care before Medicaid steps in and pays the bill. But not only will they pay the bill, there's this asset lane you have to worry about, but there's also an income lane, because a spouse in a house, if you're getting $5,000 in income for yourself and you have somebody in a nursing home, now Medicaid's picking up the bill because you've followed those rules, they're also going to keep some of your income. So not having a plan, listen very loudly here, everyone, can leave the surviving spouse financially destitute. So there needs to be a plan. This is one of our big parts of what we do in our advanced planning, to figure out what, if this happens, what is the plan? Because we've gone down this road many times with people. It doesn't mean go buy a long-term care plan like John Hancock and Genworth and Mass Mutual and all those companies. It means that there's other things we can do. There's also asset protection trusts out there. Even though Florida doesn't abide by those rules, you can still have one, and it does help a little bit. There's other things, irrevocable trusts that you can do, but the elder planners out there, they are so amazing. Yeah, they might cost you $5,000, but they'll save you hundreds of thousands of dollars. So I don't want to give advice to this young lady here at the moment because there's so much to unpack here and what that needs to be done, but there are tricks. We know the tricks, and we'll give the wisdom, and then we'll have you still let the attorney tell you those same tricks. But we want to make sure the spouse that is still alive in house is not financially destitute or out of money, and now you're forced to sell your house, go get a roommate or go do something like that. We want you to be ready for this. People go broke, Randy, over this phase of life. They file bankruptcy. Everything, the legacy is gone because everybody says, well, it's not going to happen to me. Or you just, there's a plan. I'll just grab the gun. No, that never happens. Right. Come on. You're putting your head in the sand. You're ignoring it because it's a tough conversation. And I'm going to tell you, enjoy your lives in the meantime, because eventually this could happen to you. Enough people are out there spending time with their family, spending money. I mean, go spend some money, go enjoy life, because eventually our health, does derail and it's going to happen. So while you have your health, take care of yourself. Who cares about your statements that you're looking at and all those amazing returns? It's not about returns. It's about your memories and just getting prepared for this phase of life. As morbid as this conversation is going, let's turn it around, Randy. Make it upbeat.
And I can. I think that one of the reasons that you go to a financial planner is to avoid a crisis in the future. Now, you may think what we're going through in the market right now is a crisis. Okay, if it is for you, then it's time to talk about that and your money. But many of us fear what this woman is going through, and this is a crisis. When all of a sudden, if you don't have any kind of insurance to pay for this, or you haven't put anything together, you start writing checks every single month. Now, I want you to picture yourself writing a check for $10,000 every single month. Wow. That will pull all the money out of your retirement accounts in a hurry. So let's not let that happen. Let's have a plan for that. Let's sit down and talk through it and find out what your options are. 833-368-3680, 833-368-3680, or online, it's zinniawealth.com. I'm going to tell you a quick story, Charisse, because it's just happened to me. Because I've got two granddaughters now, right? Yeah. And so I went to South Carolina to play golf, but Zoe's 6th birthday was Saturday. So I decided to drive 300 miles back to get to her birthday party, and we did. And when I got there, there were these huge boxes, I mean big, long boxes that were in the foyer. And I said, what's that? And they said, we bought Zoe a bunk bed. And so I thought, oh, great, this is going to be fun. But Dad didn't want to put it together because he had a long day. And we convinced him, and Zoe with her big eyes, well, I want my bed. So we decided we were going to put that bed together. And it took 2.5 hours to put that bed together. But I got the two girls, age 6 and 3, opening up the boxes and helping me with the hardware and bringing all the pieces into the bedroom and helping me with everything. And we got this great picture at the end. And something as simple as building a bed built a memory for me. And I've got that. And I just cherish it. It just happened last weekend. And that's the kind of stuff that I want in retirement. Simple things like that and building memories. And Charisse, that is really what we're talking about in retirement planning, is building memories, isn't it?
Building memories, because one day when you're on your deathbed, you're not going to be pulling up your Raymond James statement saying, look how good I did with my returns. You're going to be looking at pictures. You're going to be sobbing. It's going to be a sad day. And you're going to be counting all those memories. And you're going to be talking about them right then and there. It happened with my own father. I remember that moment. And I will remember that moment forever. But the only thing he cared about is how well he did and what he did with us and the memories that we spent together. especially all of his years, but his final like 5 years, right? So you're right, Randy. You almost made me cry when you told me that story because that's what it's all about. People forget.
It's such a simple thing, and I mean, I'm texting Dad and I'm saying thank you for I know you didn't want to do it, but it really meant a lot to me, and I hope it meant a lot to those girls. But I got that picture, and it was really a cool day.
That's awesome.
To me, that is kind of what I'm looking forward to, and I hope you all are too. And those are the kind of things that we want to put the money with so that you can do those things in retirement. Give Sharice a call. Let's talk through it. Here's our number, 833-368-3680. Again, 833-368-3680 or zinniawealth.com, ZINNIA wealth.com. There's a gold box there. It says complimentary retirement consultation. Click on that. You'll be on your way. We've talked a lot today about the markets, and we've talked about tariffs, and we've talked about all these things, but I think we're going to go back a little bit because I think the main concern right now, Sharice, this is why people tune in more to the show this week, is because now people are looking at their accounts and they're seeing, holy cow, I'm down $25,000. I'm down $50,000. And boy, that doesn't sound good. When's this going to turn around? Mm-hmm. And, if you're right next to retirement, and it doesn't turn around, now you've got $50,000 less to deal with, and that's not good. So let's talk a little bit about just kind of keeping a cool head during times like this. And one of the ways that we can do this is to sit down and have a meeting and give you a little bit of confidence. Sometimes just making a couple of little strategic moves can make you feel like, okay, I'm on top of this. So let's talk about a meeting that happens this week in your office.
Yeah, well, let me first tell you about a conversation I recently had. So I had a friend, they're 45 years old, and so they're younger, right? They're not retiring for 10 to 15 years or so. And they said, Sharice, I invested all of my money in the stock market. And I have some debts that I'm like ballooning that I have to pay in the next month. Mm-hmm. And my account's gone down 12%. So he's managing his money. He's clearly high risk.
Right.
And he's like, you're all the time on your show, you're like, I'm not supposed to sell when the market goes down, but I have a forced hand to sell. Mm-hmm. He's like, that's like, I'm going to lose like 30 grand by doing this because I've got to sell something to pay off this other deal. And he went, oh my gosh, I'm right in that place that I know better. And I said, well, why didn't you leave what you needed? Because you knew this debt was coming due in a year. Why didn't you leave that in something safe and like a money market that was making 4.5? He's like, I was being greedy and the market was going up and I wasn't listening enough with my ears. And so it's a tough time for people like that are having scenarios like that. And so people who are in retirement are nearing retirement. On top of that, if you have a 60-40 portfolio and the market's gone down 10% and you've lost maybe 6% and you're pulling money from that portfolio, I just truly hope that they hang in their approach and they don't panic approach and take buying opportunity approach was spoken to you before you started that process, because those things are true. But if you have all your money in the market and now you have to live off your money and you don't have opportunity to buy things, it makes the full circle of the income goes round and round a little bit harder because now you're having to pull out when the market goes down. So we just want to be really cautious. There's a lot of fear mongers out there. We don't ever want people to sell at the wrong time. Have confidence in the stock market. Number one, there's a lot of changes going on. It's too early to decide what's really going to happen. We have a Fed meeting in May. I think after that, maybe things could turn around and pop up, right? I can't predict. All I know is that there has got to be a strategy and a portfolio where it is not based on the stock market, right, Randy? We say that all the time. We need something we can live on that's not in the stock market, but can still very well make 4 and 5 and 6%, right? So not all of our money has to be making 10 and 20%. And that's one thing you got to remember as you're nearing retirement.
Well, one of the things about that guy, he kind of painted himself into a corner. He got himself into a fix, and he had no other options. So let's not let that happen to you when you're in a situation where you don't have income coming in, and the only place you're getting your income is peeling money off the top of your brokerage account. And then all of a sudden, that account is way down. You're in that same corner that guy put himself in. So what we talk about here, and we've used this word a lot today, and that is allocation. Where is your paycheck coming from?
Right.
If you're 45 years old and you've got a job and your money's coming in every 2 weeks, this doesn't hurt you as bad. But when you're in retirement and you don't have that job and you're depending on the market to give you your paycheck, you're in the corner.
It is so true. And, we had a couple of good years and everyone was chasing this tail, that rocket ship.
Yeah.
And as it's going off and taking off, eventually we're going to get burned. You just want to make sure you're not fully burned, right? You don't want your entire portfolio burning up right now. So, because you have to have leverage and you have to shift gears. And I know this doesn't make anybody feel better out there, but right now there is no better time than the present to take advantage of what's happening in the stock market right now. And if you don't have confidence and you're not sure what your plan is, that's not a good sign. That's even a bigger reason to come in and see us. So I would implore people to do that. Pick up the phone, call us, go to our website, check us out. We say what we mean what we say here. We want to protect first. We want to spruce up a portfolio and allow some growth. We want the income there. We want to protect from taxes in the future and long-term care costs. There's so many moving parts here. And right now we're just talking about the stock market. And if you're not feeling confident, then you don't really understand your plan and nobody wrote it down for you. Nobody really made it clear to you, which scares me.
Well, this is a wake-up call. Is exactly what it is. This gets your attention. When the Dow goes down 1,500 points in a day, that gets your attention. Now, I want you to think of yourself right now. So let's say you're 63 years old right now. Now, fast forward 10 years. This happens to you and you lose all this money. How are you going to feel? Not good at all. So let's sit down and build what we call a portfolio x-ray. And Charisse, we've got about 2.5 minutes left in the show. When you do an analysis and somebody walks in the door and they go, gosh, I don't like what I see here, Charisse. What can you do for me? The first thing you do is say, what do you have? Where is it? How's it doing? How can we stop this?
Yeah, so we're going to take inventory. We're going to see what your incomes are coming from, pension, Social Security, maybe an annuity, maybe you have real estate. We're going to look at your liabilities. Do you still pay a mortgage on your home? Do you have debt? And we're going to hash that all out and see what you have for disposable income. If there is no disposable income, we got a lot of work to do, and we are going to hash it out. We're going to take a scalpel to your portfolio, and I'm going to show you things you don't want to see, but you need to finally see. Some of the stuff that's high fees, I'm like, get rid of this because you can replace it with the same type of return type of investments with much lower fees. That's people just love that part of it. We're going to show you how to get the same rate of return with lower risk. It is possible, everyone. You don't have to have these glorious, amazing stocks to get what you need in retirement and to make sure those checks are always showing up no matter what the stock market is doing. So what we do here, it's, nothing special. It's just we put some work together. We plan. It's called advanced planning. We put it on paper. We bob and weave, and we make sure that everything is reasonable and we're not overpricing things and we're not over saying, hey, we're going to double your money in 5 years, right? We're not doing that kind of stuff. We're just trying to make sure that your retirement is as successful as you want it to be and that you can go on trips during times like this and not worry where your paycheck is coming, right?
See,
when the market goes down 30%, you're going to get a paycheck. You can still book your trips, right, Randy?
And there is the difference right there of the difference between Charisse and a broker, a difference between Charisse and your stock jock. And she is in this retirement zone, and she has built her business on helping you get ready for and get through retirement and get through times like this. Give us a call. Let's have the meeting. That meeting is at no charge. Let's get a real good look at where your money is right now and how we can help. 833-368-3680, 833-368-3680, or online. Our website is zinniawealth.com, ZINNIA wealth.com. There's a gold box there. It says complimentary retirement consultation. Click on that, and we'll get back to you. Charisse, that is all the time we have on this one. I'll give you the last word.
Alrighty. So listen, we talked a lot about the stock market and so many other things today. If you want to hit the rewind button, go to our podcast called Retirement Coffee Talk. It's on Spotify, iTunes, YouTube. You can find it right there on your Apple phones. And then here we have to say, because I thought this was a pretty important conversation today, Randy. If there's concern and you're not sure who to reach out to, the show will leave a lasting image and impression. And as usual, thank you all for tuning in. Live by design and not by default, and we'll see you here next week.
This has been Retirement Coffee Talk. To find out more about how the strategies we've discussed on this program can build the retirement you've been wanting, call Zinnia Wealth at 352-368-3680 or visit us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Sharice Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.